So you want to buy a house. What a huge undertaking that is if you're not familiar with the process. It's really hard to figure out who to talk to and who the best people to talk to are, and make sure you get good service. And we keep hearing to shop for interest rate, but then we talk to people and they don't know how to do that. And rightfully so. Who knows how to shop for a mortgage interest rate? It's something you do for most people once in a lifetime, if once in a lifetime. Very few people get to do it more than once. We're going to tackle that in a couple of videos, who to talk to, what to talk to them about, and how to negotiate, at least from the financing side, how to get the best interest rate you can. So let's go ahead and cover one part of it today and talk about who you might contact when you're getting ready to apply for a mortgage. There's really 5 key types of providers that you might consider reaching out to when applying for a mortgage. First one being your bank, second one being an online lender, third one being a credit union, fourth one being the in-house lender for a builder for new construction, and then the fifth one being a mortgage broker. Starting out right at the top as your bank. A lot of people would pick your bank because of the convenience that you might get. How nice must it be to be able to pay your mortgage payment right there in the app? Same place that you check your bank accounts, where you get paid at. And that sounds like a huge convenience to be able to just right there click and pay. That would be fantastic if that's how it worked. That convenience is not guaranteed. All mortgages are for sale. That's something a lot of people don't know, or a lot of people don't realize or think about. All mortgages are for sale. Just because you applied here and you got approved here and they funded your home does not mean that they're going to service your loan for the life of it. I did it. I made 3 payments to my bank, and then it was sold, and I was making a payment to somebody in North Carolina while I live in Texas. So the convenience shouldn't really be a factor because it's not guaranteed. You need to be taking the best deal you can get right now and just make your payment to whoever you got to make your payment to. You can't control that, so don't bank on that. And then to top it off, the convenience of making your payment in the app not being a factor, then what's left? It's service. What kind of service are you getting? And rate. What kind of rate are you getting? Bank, you're probably not going to get amazing service from. You might. Well, the bank, how many customers does the bank have? Probably a lot. And how many loans are they processing at a time? When you get a lender that's got hundreds and thousands of loans at one time, priority is based off of when the loan closes. So if you applied early, thinking you're going to get ahead of the game and get this thing knocked out and ready to go, and then somebody else applied late 2 weeks before closing, they're going to get the priority. And that's going to delay your file, delay you getting clear to close. It's going to cause unnecessary stresses. If you're shopping based off a rate, your bank may not be the best place to get that. Second one we mentioned is the large online lenders. Mention any names, but you know who they are. They advertise like crazy, and we'll see them in the Super Bowl. So you open up your phone, they're right there. They're letting you know that they want to handle it. And I will say that their application process is probably the easiest. Autofill half of it straight from your phone, and they can pull your pay stubs without you uploading them. The application process for the online lenders is probably the easiest. Where it ends with them, it's another one of those convenience things. And then the convenience of the application is really where it ends with the online lenders. Their rates get beat all the time. Every now and then you might catch one that's something slide and they're getting a good rate in there, but you're not getting service with them either. They are high volume. They're super high volume. And then in some markets, they've got a reputation. Oh, you got a pre-approval from this online lender? Hey, we're not as competitive. That doesn't make your rate look good, because now they've got a reputation for dropping loans. We're going to get through 2-3 days from closing, and they're going to decide, oh, we got too much going on. We don't want to do that one now. The third one's credit unions. Credit unions are a great option if they're available to you. Some of them are kind of exclusive. If you're not already a member, you may not be eligible for their services. But if you are, sometimes they've got some of the best rates and programs available. It's just a matter of if you've got access to that or not. Fourth one we mentioned is the in-house lender for the new construction companies, the ones that handle those big neighborhoods that pop up overnight seemingly. Their own mortgage company. A lot of people don't know that until they go to look at it. You may already have your pre-approval elsewhere, and then you go to look at one of those homes, come to find out your pre-approval is no good there. And that's not to say nothing about the builder. That's just how they do business. You have some of the best rates available. Those are really hard to beat, and fortunately, they've got very limited buckets. What I mean by that is they only offer 1 or 2 programs, and if you don't fit into those, you got to find financing elsewhere. They also only lend on their own homes, so it's kind of a one-stop shop, and that's what they want it to be, and it works. if that's what you're looking for. You go here, you see these homes, they're all the same, and you get financed through them, and you're set up, you're good to go. It's a one-stop shop, and it works. If that's what you need, they're the people to do it. Then the last one would be somebody like me. I'm a mortgage broker. You submit an application to me, and then I get to go on your behalf and shop for the best rate, the best terms, the best program that fits your situation. And then plus, when you work with a broker, I mean, you're calling them directly. You're not picking up the phone and going through an automated directory. You know, their cell phone number, their email address, and they're normally pretty responsive if they're good at their job. Your realtor is going to enjoy that because they can get updates quick. Level of accountability when you can pick up the phone and call the person responsible. I really think that that's the best option. You get better service, better rates. And then also working with a mortgage broker, you get the benefit of that initial consultation where take a look at your file, and it's not a yes or no at this point. It's a, hey, this is what we need to work on, or you're good to go. And with that in mind, the success rate is going to be a lot higher if you're working with a broker compared to working with a bank or an online lender. Credit unions are probably pretty good. You can get good service from credit unions, but like I said, not everybody's got access to that. But that's about enough for this video. We don't want to overwhelm anyone. For the next one, we'll talk about the whole process from the initial consultation to the pre-approval and submitting an offer with your realtor all the way to closing, and we'll let you know what that looks like. If you need help buying a home in Texas and getting financing for that, or if you want a second opinion on something you're already working on, shoot me an email. I'll reach out to you and we'll see what we can do. Thanks, guys. See you next time.